Good morning. This is Larry McMillan with a stock market update on Monday, April 25th, before the market opens. So things turned decidedly negative at the end of last week. In the middle of the week, it appeared that the bulls were going to try to put something together, but it failed badly after some positive earnings by Tesla, which is just coincidental, I guess. Anyway, S&P is now appearing to be ready to test the support at 4,100 to 4,200. Futures overnight are trading down towards 4,200. So if that gives way, then we're going to have a whole new leg of the bear market, and confirmation that we are actually in a bear market will be taking place. But if we bounce off here again, then we're still back in the same volatile trading range that we've really been in since late February. So while it's not not really negative, it's certainly not positive at all. Equity-only put-call ratios are both on sell signals. They, I thought, somewhat surprisingly turned to sell signals a few days ago. That turned out to be quite a pretty good call from that indicator. Breadth has been terrible, of course. In days like this, it's just going to be abysmal. So both breadth oscillators are on sell signals, and they're very oversold at this time. New highs, again, the middle of last week, there was an attempt by new highs to rise above the number of new lows, but that has failed again. And so that indicator is also on a sell signal. The volatility complex, which has been fairly bullish for stocks, is weakening badly right now. The VIX spike peak buy signal that was in effect has been canceled out, stopped out, and a new one is setting up, but that could take a few days. And even if that's the case, the intermediate trend of VIX did not turn positive, and that's a major development, I think. Very similar to what happened in January. It looked like back then, and it looked like last week, that perhaps the 20-day moving average of VIX was going to fall below the 200-day. That did not happen, and it could still happen, of course. They're not that far apart, but now they're starting to trend away from each other again. So the trend of VIX is still up, and that is not a good sign for stocks. The construct of volatility derivatives, which is basically the term structure of the futures, has turned completely flat. It had been positive, that was good for stocks, but now it's flat. We're wary of this situation. If it turns negative, that again will be a sell signal. And in the past, while not every time the term structure has turned negative has been terrible for stocks, sometimes it has been. So if the May futures, VIX futures, which are now the front month, begin trading at a price at, let's say, at least 50 cents higher than the June futures, then that could spell more trouble for stocks. So right now, we're not seeing anything bullish, a couple of oversold situations, but that's about it. We know these things can change quickly. They did in March, and it looked like there was this great rally underway. Turned out to be just another bear market fake. That's the way bear markets are. They grind their way lower and then have these tremendously sharp short-term rallies in there that try to stop out the shorts. And so the old adage, everybody loses money in a bear market, comes true. So we'll see, but for right now, we're maintaining a negative attitude on the overall market, and we will trade individual indicators as they might occur. So have a great week trading, and hopefully you'll be able to stay on top of this market. I invite you to come to our website for a look at our newsletters, where we follow all of these things daily.